Hello, everyone, and thank you for attending our new webinar about best trading strategies to use in the financial markets. My name is Yazan, and I am the Chief Marketing Officer in One Trading Markets. As I told you, we're going to talk about some techniques or some success strategies that's been used in the financial markets. The duration of this webinar will be around 45 minutes. There is a chat button, which is the question mark button. Anytime you can just drop your question, and between each and every idea or each and every topic, I will have a look at the questions and I will make sure to answer them all before the end of this webinar. So we're gonna discuss today three main strategies. We will start with the first one, which is called the multiple MA strategy. MA means moving average. If you know about moving average, that's fine. If you don't know, I advise you to go to my website, www.yazanshakfeh.com, and see the introduction webinar because I explained this in details in the previous webinar. So this webinar is designed for people who has a little bit brief of the financial markets, because we will go straight away in applying those strategies on the market. So the first strategy, as I told you, is the multiple moving average strategy. The time frame that we are using is 1 hour. The take profit after entry will be 100 pips, and the stop loss is 50 pips, or using the multiplication strategy that I also explained in a previous video that you can see in my website also. So why take profit is higher than the stop loss? Because statistically it's advised to have always take profit more than your stop loss. So in case you made like 10 trades, in case like 5 of them win, 5 of them loss, so you will be having a win at the end. The summary will be like 250 pips in profit. So even if the winning trades and losing trades are the same, or even if like 7 are loss and 3 are gain, so you still be having a break even at least. So that's why we are choosing the take profit to be at 100 pips, and the stop loss will be on 50 pips. And we're gonna use 38 simple moving average, and we will divide them in 3 color set. Feel free to write these details if you would like to write it, but again, the webinar is recorded and it will be shared on my page later on tomorrow or the day after. Starting with the first set, we will color it in pink. We will do simple moving average for the following times: 2 hours, 3 hours, 4, 5, 6, 7, 8, 9, 10, until 15 hours. So we're gonna have moving average for 2 hours, 3 hours, 4 hours, 5 hours, 6, 7, 8, 9, 10, 11 hours, 12 hours, 13 hours, and 15 hours. So this will be the first set, and we will be coloring it in pink. The second color, or the second set, we will color it in blue. It will be simple moving average for the following times: 17, 19, 21, like this, like there is a gap of 1 for all of those moving averages until we reach 41. So again, the blue moving average will be 17, 19, 21, 23, 25, 27, 29, until 41. The third set of the moving averages will be simple moving averages for 44 hours, and then 47. You see now we're adding 3, 3, not 2, 2. 44, 47, and then 50, 53, 56, until 74. So if we apply it in our MetaTrader, let me just close all of the positions. So if you're applying it on MetaTrader, it will look like this. So how to add the moving averages? I will just delete all of the lines that are mentioned here for beginners to know how to add the moving average. So you go to the indicator list, okay, and then you go to trend, and then you choose moving average, and then you choose the time. So for example, period 1, and I color it pink, for example. I'll do the same, moving 2, again I will explain it, trend, moving average, and then 2. The method of the moving average, we will keep it simple, simple moving average. And you keep doing so until the 15. The same thing, and you can see when you add it first time, it will be on the quick list here. So straight away you can click and make 3 and 4 and so on and so forth, okay? When you're applying them all using the color set I made, you can make it as a template. After you finish all the moving averages, you can click Save Template, and you name it the way you want, okay? I already did that, so I name it Yazan MA strategy. So you will be having something like this. So this how it will look like. And for the time frame, as I mentioned to you, we used the 1 hour. It can be applied on other time frames, but it's most advisable to use the 1 hour. For today, for the live test, we're gonna go with the 1 minute, so we have a better understanding. So we will be having more chances or like more opportunities to use, but still, the lower the time frame, the more risk you're taking, and the more noise the market will have. So the strategy might not work pretty well. The wider the time frame, the better range, and the smoother the market move will be for analysis. Okay, so let's get back to our slides. So if we go back to our slides, the strategy is when the pink moving averages becomes above the blue and green moving averages, this is a buy signal. So you buy when the pink lines crosses above the blue and the green lines, as you can see here. In case the market rebounded to the blue area and the green area again, this is a good area to make another buy, just to average the price. So if you're buying at these levels and the market go against you a little bit, so use the blue and green areas as a support level to do another buy. Vice versa, for the selling signal, you sell when you see that the pink lines crosses and becomes below the blue and the green lines. So this will be a sell signal. Again, when you sell and the market go against you and the market reach the blue or green areas, this is a good opportunity to make another sell just to average your price. So here, for example, averaging was when we made here like a buy when the pink was above the blue and green, but the market rebounded, reached again the green area and the blue area, so you do another buy. Here, for example, the sell, we sold the market go against us, reach the blue area, you can average. And if it goes up further, you can also average at the green area. So let's go back to our strategy and try to pick some opportunities. So for now, it's just for practice use for now, because we don't have plenty of time. So we will be using the 1 minute frame because our time is a bit tight. So you can see here, for example, or we choose like euro dollar. So you can see here that the pink is below the blue and the green. So this could be a sell opportunity. So you make a sell. And as I told you, the take profit will be 10 pips and the stop loss will be around 5 pips. You can, for the stop loss, you have two main strategies. So you even make the stop loss 5 pips, or you do multiplications. For now, I will just keep it simple and do 100 mini pips, which is 10 pips, and 50 mini pips, which is 5 pips only. And we'll see how the market will react to that. Okay. Another example, do you have any product in mind that you want us to analyze? If you have, just let me know. Let's see, pound dollar, for example. The pound, you can see also that it was, you see here, the pink was below the blue and the green, and it was perfect when the market go against, and we average in the blue area and the green area. Now it could have been in profit. Okay, so again, we can see here that it's crossing below, but it's better, always better to see the pink range is wide, like this area. You see, like the pink range is wide, while here it's very thin. So the wider the range, the better the opportunity. So here it's a bit noisy because there is an intersection between those, but still maybe we can take a slightly risk, but as I told you, it's not very clear. Again, you can put 10 pips with 5 pips and see how the, sorry, this is on 1 hour. So you put it slightly wider. So we put a real 100 pips. By the way, the 100 pips is 1,000 mini pips, because here it's per mini pip, because we are using the 5 number after decimal. So this one is a bit for a longer time period than this, because we used in the pound the 1 hour chart, not the 1 minute. Okay. We can, if you have any product in mind, just share it with me on the chat so we can just explain it in details. So maybe Australian dollar or Canadian dollar, maybe. Canadian dollar is CAD USD. So I'm looking at it. Oh, sorry, USD CAD. Here it is. So if we apply the template and we go to 1 minute, you can see it's also not very clear, but going back, you can see here like the pink was above the green and the blue, and you can see that the cloud is big. The bigger the cloud, the better the opportunity. So from here we can see the cross, okay, and now it went back, and now again the cross. So this could also be a sell signal from here. So if we just do sell, quick one, I'm just maybe having, okay, it's not this one, USD, here it is. On this product is exactly the same. So as I told you, it's now a bit showing a sell. So we will be doing a sell here. So you can see from here, it was giving you a sell, and then it rebounded and now reached the area of blue to and green. So this could also be another opportunity, and we will do the take profit. In this one, I'll make it 100 pip, which is 10 and 50. And there you go. Any questions so far on the first strategy? Pink line, cross blue line or green line. Is there any time limit here there? Once that cross the green, the moment itself we need to buy, or it needs to wait for cross? No, it doesn't need the question is like when the pink, for example, rebounded against us and reached the blue and the green, is there any specific timing when to do the other transaction? It's absolutely no, because maybe the price will go up and drop significantly. So the minute or the moment you see this opportunity, you can do it. There is absolutely not an issue. So that's fine. So this is the first question we're having. Is there any other question? I think it's easy and clear. So we will try it also maybe on oil, WTI, for example, and do like this. You can see here, the pink was above the blue and green and now becomes below. So from here, maybe we can sell. And if the market go again to the green and the blue, we can do another sell. So this could also be an opportunity for us. So let's do the WTI as well. But as I told you, it's always better for a longer time frame, because here we're using 1 minute. So the 1 minute is really very a quick one. So you can see on the 1 hour we were having a sell, but in the 1 minute we're having a buy. So I always have this kind of question: who's right, this one, the 1 minute, or the 1 hour? The answer is maybe we are both right. If you are just targeting, for example, a couple of pips on the 1 minute, so maybe the market will go up for a couple of minutes, but at the end of the 1 hour, it might be going down, or at the end of the day, it might be going down. Usually when you are analyzing the 1 minute, you are expecting the movement for the next 1 hour. But when you are analyzing the 1 hour chart, you are expecting the movement of the whole day. So it's normal to keep the position for 1 day if you're using the 1 hour, but for 1 minute, it's normal to have it for another hour. But as I told you, the shorter the time period, the more noise the market will have. So for now, according to this strategy, it's a buy signal on the WTI. So I will buy And again, I will put here, I will put 10, 72.74, 50. There we go. Okay. Any questions so far? Any other questions? Is it clear? So again, as I told you, in case oil dropped to the blue or the green, I can again do an averaging. Okay, great. So this is our first strategy that we are discussing. And the second one is called a broken trend strategy. The time frame we use for this strategy is also 1 hour. The take profit will be 100 pips, and the stop loss could be even 50 pips, or using multiplication. Multiplication, we will discuss it now in the third strategy. It's not a strategy, it's a methodology to manage your orders. But for now, keep it 100 take profit, 50 stop loss. And when I explain the multiplication, you will know why it's better to have the multiplication to manage your orders. The indicators that we will use is the simple moving average, which is the line we are doing. We're gonna use support and resistance. If you don't know about the support and resistance, please go back to my previous video. I'm explaining it in details. And the general trend, it's also explained well in the previous video, which is comparing the highs and the lows. As mentioned earlier in the previous webinars, the uptrend is a series of higher highs and higher lows, and the downtrend is a series of lower lows and lower highs. So, how does broken trend strategy work? So you use the moving average. The moving average usually 24 hours, okay? And you identify the trend and the support and resistance. So when the market is changing the trend, what does changing trends mean? Means it was a downtrend and becomes an uptrend. How to identify having a downtrend or uptrend? The downtrend is when the market making lower highs and lower lows. This is downtrend. So the market always under pressure, making more lows. And when it was trying to pick up, it was not reaching the previous highs. So market is under pressure. When we start having higher high and similar low, so that means the lower highs, lower low series is broken. So from the yellow circle, we can see that the market is changing the trend, okay? So according to the trend in the yellow circle, the market is trending up, okay? And if the resistance, you can see here in the purple line, the market was resisting at the end of the time period. You can see here, one time the market was trying to break it, couldn't do it. Second time couldn't do it, but the third time it could do it, okay? And the moving average, the price was below moving average, becomes above moving average. So all three indicators in the yellow circle was indicating that the market is moving up. Why? Because first, the trend is changing from downtrend to uptrend. Second, the market was having a resistance, but now it broke the resistance. That means people who were, or like the selling pressure that we're showing here is no longer available. That means there is something positive in the market. Thirdly, the market was below the average and becomes above the average. So let's say like the average price of the stock was like 100 and the market was at 70, but suddenly become 120. So that means there is a momentum in the market, and that's why it's a buy signal. And this is what happens from the yellow circle. So all three indicators has to give me a buy signal to buy. in this strategy. If one of them is not giving you buy, so you don't enter the market. So it's a signal has to come from all three indicators. Vice versa, the selling signal is exactly the opposite. You can see here in this example, the market was trending up because the market was making higher highs and higher lows. Higher highs and higher lows means the market is in a positive momentum, driving the prices higher and higher and higher. And every time the market was pulling down a little bit, that was simple or profit taking because it was not crossing the previous low. When we cross the previous low, that means there is something wrong and we are changing in the trend. Okay, so lower lows now, similar highs. So no more buying pressures. We start having similar highs and lower low. So according to the trend, we are heading to a decrease in the prices. Okay. According to the support, have a look here. The market was in a support one time, two time couldn't do it, but the third time the market broke this support. That means the buying pressure that was here, it's no longer available. People who were buying at those levels, believing that it's a cheap price, they are no longer buying. So this drives the market to go lower. So this is the second indicator. The third indicator, the market was above the moving average, becomes below the moving average, and that's an indicator. All three indicators, indicating in the yellow circle that the market might head down, and this is what happened here in details. So let me just try to pick some opportunities in this and see if we can have any. So you can see here that the euro, according to the moving average now, it's making a buy signal. And the pound, it's for a longer term, it's still holding. But you see for a shorter term, it's not providing a very accurate signal. So let's go to the other strategy and try to figure out any momentum. So the moving average I'm using is 24 or 30, preferably 24. And you go to the 1 hour, okay? So again, how to use the moving average, just add indicator trend, moving average, okay? And let me try to get maybe Tesla. Let's try Tesla. Okay, you can see here that according to the trend, have a look here, the market was trending down, okay? We were having lower highs and lower lows. We start making higher high and higher low here, okay? And the market was above the moving average. You can see here in this line that the market was having a resistance here. One time couldn't make it, two time, three time, but the third time could make it. So this could have been a buying signal. So it's a buy here, and our target would be even 100 pips or to target the previous highs. So the previous highs would be this one, already crossed it. So could be the second one, which is this one. You can see here, and this would be the third one. So good buy might be a Tesla, and the targets would be for the coming resistance, which is 711 and 745, according to this strategy. So I will just make a buy. and you can adjust your take profits to be even to the first or to the second level, which is 711 or 745. So 711, for example, and there we go. Okay, the stop loss could be if the market breaks this level, or you can put it as a 50 pip. But I always advise to have stop loss that is breaking support. You can see here there is a support. I will color it in green. You see here 1 time, 2 times, 3 times, and when it breaks it, it made a big difference. So here, if it breaks it, that means maybe we can see this scenario again, and I don't want to have that much of losses. Is it clear? So I have now some question from where the market is controlled. Is it Japan or New York? You mean the spot market? Yeah, actually, like the highest volume in the market is in New York, but also Japan for the eastern side is most significant in Forex. But in the stocks, the highest volume is in the US. So you always see the highest interactions happening in the US and not in Japan. So you can see here that maybe we're having the WTI. The WTI had a profit. It's already took the profit, and we had a loss in the euro dollar. As I told you, it's pretty noisy, so always preferably to have a wider range. So for the WTI, it just reached the target and went down. For the euro, it was a sell, but now becomes a buy. So buying from here might be a good option, and we already, I think it's gone the 10 pips on the 1 minute. So you have to keep an eye on it. So sometimes you have to be maybe a bit flexible. So having a sell, if it's against you, you close it, you start with another buy just to make another deal, and so on and so forth. But for the trend breaking, and it's more quiet strategy, not asking for too many positions. So the broken trend strategy is a bit calmer strategy, we can say. For the moving averages, it gives you more in and out. But for the broken trend strategy, the conditions are harder, but the accuracy is a bit higher. Any questions so far? So those were the two important moving averages, two important strategies. And now I would like to add on it the multiplication method. Remember when I was telling you about the stop loss, you can put it as an exact figure or to use multiplication. What's multiplication? Multiplication, it's not a strategy actually, it's a method that can be used to manage your positions. When you learn the multiplication, you will be able to control the positions that are against you, to just handle it and to adjust the trades in a way in order to exit this trade with a winning. How? You aim to adjust trades always by doubling until the market rebounds in your favor. So whenever the market go against you, you do double the previous position, and double for each specific number of pips when the market go against you. However, it needs a bit high of capital, or it needs a wider range of points when you multiplying. I will explain it now in details. Just for give me 1 minute to explain the multiplication. So for multiplication, let's say for example you started a position with 0.01. The market go against you, you do the double the position when the market go against you. We call it averaging. You're averaging your price. So you buy again 0.02. The market again go against you 0.04. So always double the last position. You keep doubling till the market rebound with a certain number of pips. These certain number of pips will make you in profit in general, okay? Because you will keep doubling and you keep moving your take profit with you. So for example, let's say you bought at point A, okay? Let's say 0.10 pips, okay? And the market, and you were putting like take profit 15 pips, for example, or like 30 pips or whatever, and the stop loss 15. Here, instead of stop loss, you will say, every time the market go against me 15 pips, I will do double the position and I will move my take profit to the near by 15 pips. So when you are from A to B, you buy double the previous position. So you buy again 0.2 and you shift the take profit to point A. Again, if the market also go against you from B to C, you do again double the position and you move the take profit from A to B. If again the market go against you, you keep do that. At the end, the market should rebound because there is no market in the world keep going down forever or keep going up forever. So you keep doing this until the market rebound by only 15 pips. So from C to D, you will make 0.8, which is again double the C, and you will shift the take profit from B to C. So the minute the market go from D to E, which is same as C, the profit of this transaction will have a winning that close all of the losses of A to B, B to C, C to D. So in our example here, A to B, you lost $15. B to C, you lost in the first position $30, and in the second one, 30, because here you sold from B to C, you sold another 0.2. So this is the loss of it. C to D, you open again another position. So you have a loss A to C, sorry, A to D, which is $45, B to D, $60, and C to D, $60. When the market rebound from D to E, this transaction will make you $120, and the C to D, the C transaction would be on 0 because the buy and sell, it's the same. And those two will have a $30 and $30 losses. So in total, you will be having $120 in profit and $60 in losses. So this how multiplication works. So you keep doubling. We call it double or nothing. You keep doubling, 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 doubling at the end and moving the take profit with you. Doubling and move the take profit with you. Always, always do like this until the market rebounded, and this will be the success of your trade. So having a trade against you, if you're using this multiplication strategy and you use the number of pips wisely, for this 15 is just an example. If you're dealing with a high volatile product, it's advisable to make it like maybe 40, 50 pips, 60 pips, for example, pound dollar or pound yen. If it's moving like 200 pips a day, if I know that maybe my account can handle 4 multiplications, then you can make it 50 pips. You double it every 50 pips. So in this case, even if the market go against you 200 pips and then rebounded by 50 pips only, this could be a winning trade. Is it clear? But losses, then profit. Yes, it's you keep losing and doubling. You keep losing and doubling, and then the minute the market rebounded, you can see here the profit of the last trade will offset all of the losses and it will give you more profits. So I will share it with you on my screen, this methodology or strategy. Actually, I'm just using it as an expert advisor. I just did this strategy as a robot, okay? The entry, I just do it anything random because as I told you, it's just like the multiplication is just a method of trading. So when you master it, so any trade that's in loss, you can control it and you can end it up in profit. So what matters in the financial markets is not the entry of the market, whether your entry is right or no. What matters is how to manage your loss trading. So this is the most important thing. And I have my trading account shared on my Instagram. It's 13482111011, and the password for you to view is ABC Capital 123 using the server OT Markets. Okay, and you can see it on my Instagram at Yazan Shakfeh. And also you can see my trades and my analysis on a daily basis on my Telegram at Yazan Shakfeh Trading. So I will thank you for now. I'm just stopping the recording for now, and I will take all of your questions and I'm gonna show you some examples.